Stop what you are doing. The biggest, wildest new trade on Wall Street just dropped, and it involves your tax dollars and the most volatile stocks on the planet. We are talking about quantum computing stocks. They are going absolutely ballistic because the US government is reportedly looking to buy ownership stakes in them. Listen up. D-Wave Quantum, IonQ, Rigetti Computing, and Quantum Computing Incorporated, or QCI, just exploded. Shares surged anywhere from 5% up to a massive 26% in a single day. This isn't some random Reddit meme rally. This is a political earthquake shaking the entire tech market. The reports say the Trump administration is actively talking to these quantum firms about handing over equity, actual shares of the company, to the Commerce Department. Why? Because the government wants a piece of the upside if these cutting edge tech companies succeed. They are reportedly vying for federal funding awards meant for promising technology companies. If these deals go through, the companies that agree could receive a minimum funding award of at least $10 million each from Washington. That cash is huge, especially since most of these companies burn through money like a bonfire. This isn't just theory. This is a massive shift in how Washington handles critical industries. The government has already done this twice this year. Earlier, the Defense Department took roughly a 15% ownership stake in the rare earth minerals company MP Materials. Rare earths are vital materials the country needs to protect its supply chain. Even bigger, the federal government took about a 10% ownership stake in the chip giant Intel. That deal happened when the government essentially converted nearly $9 billion in grants it had already awarded into actual equity. The message from the top is crystal clear. If taxpayer money is funding critical national security industries, then taxpayers deserve to benefit when those companies make it big. This approach, sometimes called state capitalism, is totally unprecedented in recent history, outside of big financial crises. But here's the twist that makes the market action truly insane. Right after this news hit, causing the stocks to rocket higher, the government tried to slam the brakes on the frenzy. A Commerce Department official came out and issued a denial, stating that they are not currently negotiating equity stakes with any quantum computing companies. Now, usually when the government denies a huge headline like that, the stock crashes. But these stocks barely blinked. They held on to almost all of their massive gains. Why did investors shrug off the official denial? Simple. The market is betting on the long game. First, the denial used the word currently, which leaves the door open for these talks to happen later. Even better, it suggests the government might use a different tool, like warrants or loans, instead of direct equity, but the funding is still coming. Rigetti Computing, one of the companies named, confirmed the market's hunch by saying they are continuously engaging with the government on funding opportunities. They are literally keeping the conversation going. Second, the market knows this technology is absolutely critical. Quantum computing is now ranked alongside artificial intelligence, nuclear technology, and space exploration on the federal government's list of strategic assets. It's a national security issue. Period. Quantum computers are machines that use the weird rules of subatomic particles to solve problems that would take even the fastest conventional supercomputers thousands of years to figure out. We're talking about massive breakthroughs in finding new drugs, creating revolutionary new materials, and accelerating artificial intelligence. But here's the scary part for national security. Quantum computers could also break almost every type of encryption used today, threatening banking systems, military communications, and all your personal data. That threat is why governments are racing to master this technology. Our biggest rival, China, is reportedly spending double what the US is publicly committing to quantum. Washington needs American quantum firms to win, and that means cash flow. Just days ago, Google announced a massive breakthrough claiming its experimental quantum chip ran a complex physics calculation 13,000 times faster than the world's best supercomputer. This proves the tech is moving fast, and Washington knows it can't afford to lose this race. Now, let's talk about the cold, hard reality of these quantum stocks. This is high stakes gambling. IonQ, Rigetti Computing, D Wave Quantum, and QCI are betting their entire existence on futuristic science that doesn't fully work commercially yet. These are pre profit companies burning serious cash. Take QCI, for example. Its stock has surged a ridiculous 2,500 to 3,000% over the last year. But look at the sales. In their most recent quarter, they only pulled in a measly $60,000 in sales and reported a massive loss of $36 million. Their valuation, which is currently in the billions, is based entirely on future hope. But having the government potentially become a shareholder changes the risk equation. Investors feel protected because Washington does not want its own investments in critical sectors to fail. This is why investors are buying stocks even after the denial. For D Wave Quantum, the news is a monumental victory. D Wave uses a specific type of quantum tech that their CEO previously complained was being ignored by the US government. He said he couldn't even get a meeting. Now, if these talks are real, the government is ready to put cash down on D Wave's table. That's a huge stamp of approval for their technology approach. The government wants to secure a lead in next generation computing, and these deals, whether they end up being straight equity, warrants, or loans, are seen as crucial steps in accelerating development. Moving past the quantum mania, traders were busy snapping up shares in three other major names today. First, Plug Power. This hydrogen play is gaining big momentum thanks to two major analyst upgrades. One analyst raised their price target to $7 a share from $3, arguing that rising power costs make Plug Power's green hydrogen solutions much more competitive. Another firm raised their price target to $4.50 after meetings with the company laid out a clear roadmap towards profitability. Trading volume was below average, but those analyst calls are boosting confidence big time. Next up, Bitfarms. This company is soaring because they're moving into the hottest sectors right now: high performance computing and AI data centers. Just last week, Bitfarms announced $500 million in financing to fund this massive transition, following moves made by other companies jumping on the AI bandwagon. Finally, don't overlook Nokia. Their shares were up about 10% today after they reported blowout quarterly results. This surge was driven by massive demand from customers focused on AI and cloud services. Specifically, Nokia's network infrastructure net sales jumped 28% year over year, showing they are winning big as the global tech race requires serious physical networking upgrades. Overall, the US markets are ending the day strong, with the Dow, the S&P 500, and the Nasdaq all closing higher. The biggest winner was the Russell 2000, which led the way by gaining about 1%, showing just how much impact the volatility in those small-cap quantum stocks is having on the broader index. The key takeaway for you, the investor, is that government intervention in critical technology sectors is now a permanent market feature. The quantum computing industry is highly risky, highly speculative, and mostly unprofitable, but having the US government talking about taking ownership provides a massive floor under these stocks. This dynamic, driven by the global tech race against rivals, means this sector will remain incredibly volatile and utterly captivating. To make sure you don't miss any move in this new era of government-backed tech investing, hit that like button, subscribe to the channel, and ring that bell. I'll see you next time.